Hi everybody, Boris Schlossberg from BK Forex. Welcome to our weekly Forex segments for the week of 8/5 to 12 of 2013. Can the euro break out? As always, trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading forex on margin and to seek advice from an independent financial advisor if you have any doubts. Well, the week ended up in a seesaw fashion, pretty much how it traded most of the week, up, down, up, down. As you can see, the euro has really essentially been trading. This is a weekly chart. So let me just actually go to the daily chart, because the daily chart just tells a story of how we've been trading 32 to 33 all week long. 33 has been the cap to the euro, although we did break out a little bit higher here the other day. But apart from that, apart from the fact that we had a breakout just above the 33 level that did not sustain, we have not been able to really run the table on the euro and take out this level with any kind of force. This basically stalled at this particular high, which is the 33.50 high. Euro needs to take this out. It needs to then proceed to see if it can challenge the swing high at 3,400. And if it clears both of those levels, it's really open game for the pair. This kind of consolidation has just been a direct function of what's been going on with the dollar and with the fact that the market is just uncertain one day whether the Fed is going to taper or not. And we've been going back and forth, back and forth. Despite what I would say is actually a relatively bullish U.S. scenario, what's really impressive about how the euro has been trading is that it's really held its own, given what appeared to be relatively good U.S. data. Today's data, of course, notwithstanding, the NFP's missed by a little bit and created this move back up in the euro. But the euro, while it's been holding steady underneath sort of 32 within the hold, it also has been unable to break this 33. Now, generally, when you have these kind of volatility compression ranges, where you have these very, very tight volatility compression ranges, the one side or the other side break determines the longer-term pattern. So we need to be watching this very carefully, because if one side gets taken, there's a strong possibility that we may be able to take the top side to 34s, perhaps even extend further. On the other hand, if we start breaking down below the 32s, it really calls into the question of possibility of going all the way down to 130s and completing this lower top. Overall, if you look at a longer-term chart, obviously the euro looks mildly negative, because you have higher high here, lower high here, lower high here. That's kind of pressing against it. But it would break through this negative pattern if it took out this 33.50 and kind of held up, and then more importantly, if it challenged the 3400s. So there's a lot of commotion. There's just it's been lots of heat, little light over the last several days. But as I said, the resolution of this range breakout could give us a more meaningful signal one way or the other as we go forward. So definitely worth watching on the euro as it proceeds. Now the yen got completely slapped back off the 100 level today. We ran into 100 on the assumption that the NFPs were going to be strong, and of course they didn't, and we got rejected. And we're now sort of trading right below that level at 99. Yen sort of now trades also in a very tight range of 98 to basically 100 as it kind of consolidates. If you want to look at this pattern has really been in place all the way through the beginning of July, where we're just essentially trading this 250 point range, 150 to about 98 as we kind of consolidate. And again, here it's the market just basically waiting for the U.S. policy to become less accommodative, more restrictive. That with U.S. yields obviously starting to rise, which gives the upside move to dollar yen. Until that occurs, you have this kind of consolidation. Now, if we get a disappointment, this is an interesting thing I think a lot of people are not anticipating. If we do get a sequential series of worse than expected releases, in other words, if the economy begins to slow down in August, rates begin to start to compress to the downside, the yen could very, very quickly begin to descend. Dollar yen could very quickly descend, and we could take out 96s, perhaps even 95s, because certainly from a technical point of view, you're looking at the same kind of a construct here: higher high, lower high, lower high, and a pressing all the way down. So for yen to really truly get bullish, we've got to take out this 150 and then challenge the 101.50 to the top side. Until those levels are broken, it's least path to the downside with 98 supporting. If 98 is given in a significant way, and it's really not 98, it really has to be about 97.50. That's really just the true support level in this pair. If that gets broken to the downside, that really would signal a very serious change in sentiment and would suggest that the market really is not looking for higher U.S. rates, for tighter U.S. policy. and we could unwind all the way down. The next support level there, of course, is going to be 95s. So also a very interesting construct, a very interesting setup for the yen. Cable is following the dollar in a side-step pattern. What's interesting about cable, by the way, is that UK economy has actually been surprising to the top side consistently. We've had a huge amount of sell-off here this week, despite good economic data. And today, finally, we had a big short covering rally in cable as the combination of weak US data and strong UK data really came to the forefront. Barely, we're trading just below the 53, just like with the euro on the 33s. 53s is a tough area for cable to overcome, but the real tough area for cable to overcome is the 54s. This is where it needs to really trade up through in order for it to clear a lot of this last technical resistance and come back and challenge the highs from the June area around 5,700. So we need to be watching this very, very carefully. Of course, next week we have a lot of policy issuance out of the BOE. We have the inflation report. We have the speech from Governor Carney, and that's going to be interesting because the market's assumption now, one of the reasons why you've had this is essentially what you see here is a reaction of the market to Carney, who they fear is a massive dove coming in to take control over the Bank of England. Now, so far, he hasn't really acted in a dovish fashion. So if next week he communicates no real dovish posture, we may have potential upside move here in cable, and we could break through these key levels. So clearly, next week, watching this 54 level is going to be critical against whatever rhetoric comes out from the policymakers in UK. In addition to which, we also have the services PMI on Monday, which is definitely worth watching. And lastly, but certainly not least, although certainly the worst, is Aussie, which did crumble through the 90 level and went all the way down to practically 88.50, which was the longer term support that we talked about. And what happens with Aussie is also very interesting. We are now at a very critical juncture. Next week comes the RBA. Now, the market consensus is that RBA is going to cut. So a cut from the RBA by itself is not necessarily going to be horrendously negative for the Aussie. What the market will be looking for is some forward guides from the RBA and perhaps a statement saying, yeah, this is the last cut of the year, or we're going to cut more, at which point, of course, it opens up even further distribution in the Aussie. On the other hand, and this is a potential here, I think, for a massive kind of a shock short covering squeeze, if the RBA surprises the market and does not cut and basically says we're going to hold off to maybe another month before we decide to get more accommodative, that would be a serious shock to the system. Aussie goes right back through 90, perhaps even all the way up to 92, which used to be sort of former support or now becomes resistance. And it creates a lot of interesting unwind opportunities for Aussie on the crosses. Specifically, Euro Aussie, excuse me, in a situation where Aussie suddenly sees a very, very stiff short covering rally, now coming up to this 150 level, could very quickly tumble back down to 146, 145. Conversely, by the way, if we do have a negative RBA, a forward guidance that is dovish, and all sorts of signals that they're not going to be satisfied until they see Aussie at 85, then this 150 level is going to be given, and we probably could go as high as 51, 52. And of course, the other trade that's worth watching on the unwind. Let me see if I have it. Yeah, here's Aussie CAD, which has made fresh. No, sorry, this is not Aussie CAD. What did I just give you? This is Aussie Kiwi. Aussie Kiwi has made a spike low, and perhaps this is kind of an interesting signal. This may be canary in the coal mine. Aussie Kiwi has made a spike low of around 112. And that may be a worthwhile, there may be, at least in the near term, a tradable low in the sense that you could trade against this low to see if we get more recovery. Certainly you'll get more recovery if you have a surprise from the RBA. But the other trade I think is worth looking at here for next week is going to be Aussie CAD. Here's Aussie CAD, which did make fresh lows 92s, but now is holding steady. And I think that's also very interesting. The fact that Aussie now is holding against both COM dollars in a relatively steady fashion may be just an early signal that the market is washed out, that of course it gathers strength against its counterparties or against the Commonwealth currencies first, and then perhaps it starts to gather strength against all the other crosses as well. So that's an interesting thought for next week to consider. Otherwise, I wish you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. Over and out.